Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about Palantir, ticker symbol PLTR. Palantir released their Q4 2020 earnings report today, along with their full year 2020 report, and boy, did they have good revenue growth, but they did miss on profit. So we're going to dive into that. I'm also going to share a clip with you of what Cathie Wood at Ark Invest said about Palantir and how now is a good buying opportunity. We're also going to dive into their financial statements and their balance sheet and cash flow. We're going to talk about the positives and the negatives and the way they're paying their employees, because it's not strictly cash. We're also going to look at the chart and see if the pullback the company has had today presents a good buying opportunity for Palantir for the future. So before we dive into that, I have one request. If you could smash the like button and click subscribe. Let's get into it. Palantir reported $322 million in revenue for Q4 2020, and that was up 40% from last year. They also reported revenue of $1.1 billion, up 47% for the full year of 2020. Now, here's the problem, and here's why the stock sunk 12% at one point today. Palantir missed on profits. They lost 8 cents versus the positive 2 cents that analysts were expecting. And this has caused the share price to drop significantly at closing, almost 13% drop just today. But that may not be a bad deal for us. This could be a good buying opportunity. We're going to get into that in just a moment. So first off, let's start with some more information on what they did. Their average revenue from top 20 customers was 34% of their revenue, or $33.2 million. New Q4 contracts included Rio Tinto, PG&E, BP, U.S. Army, U.S. Air Force, FDA, and NHS. There were 21 total contracts signed that each had a total contract value of $5 million or more, and 12 contracts worth $10 million or more. Palantir has been signing contracts left and right. And since they've been doing that, yes, they've made a lot of revenue, but they've lost a lot of money to make that revenue, but not in all the places that you might expect. And we'll get into that in a moment when we look at their income statement. So for Q1, Palantir is forecasting revenue growth of 45% on the year, or about $348.8 million versus the $309 million that analysts expect them to do in Q1. So there's still a ton of growth ahead for Palantir with all of these contracts that they've been signing and a really big partnership that they made with IBM. We'll touch on that in a minute too. So let's jump over to their balance sheet here. Their income statement, balance sheet, and cash flow. So their revenue, we've got the 3 months ending 2019 to 2020, and then we've got the full year 2019 to 2020. Now, in this quarter, they made $322 million, and the quarter previous was $229 million, almost a $100 million jump in revenue. This is where it gets real interesting. It cost Palantir $70 million to make $322 million. Last year in the same quarter, it cost $75 million to make $229 million. So Palantir increased their revenue by just about $100 million, but they decreased their cost to make that $100 million by $5 million. So you can say they made an extra $105 million which brings their gross profit for this past quarter up to 251.5 million, and that's up from 153.4 million a year ago. And then for the year ending, it doesn't paint such as a excellent picture as this last quarter was for Palantir, which is something to say for Palantir's future. But for the year ending, last year they made $742 million. This year they made just over $1 billion in revenue, but it cost them a year ago $242 million to make that $742 million. This year it cost them $352 million to make $1 billion. So their gross profit this year is up. Last year, $500 million gross profit. This year, $740 million gross profit. So that doesn't look nearly as good as the fourth quarter for Palantir. Now, when we look at the sales and marketing, research and development, general and administrative, that came to a total operating expense of $408 million. That's where the loss comes in of $156 million. So when you take their total gross profit of $251 million and you subtract out the $408 million for all of the operating expenses, you come up with that loss of $156 million lost. Now, some of this has to do with stock compensation. If we look here, sales and marketing, $75 million in sales and marketing, which up here we have $147 million. So 75 million of that 147 million was stock compensation paid to Palantir employees. So employees at Palantir, they're taking less money up front as cash, and they are being paid with stock. That is a good setup if you think the company is going to grow over time and you want to get the best talent you possibly can. So that's true for a lot of cases here for operating expenses. Research and development, $47 million of the $94 million was paid in stock compensation in research and development. And then we go to general and administrative, $99 million of the $166 million was stock compensation paid to employees. So take that with what you want. I think that shows the company has a strong, growing future ahead of it. The employees are working together, think the same thing. Otherwise, they wouldn't take the stock compensation for future payment. They would take cash now up front. So I think that's a good sign for the company. Now, when we hop down to their balance sheet, they have a lot of cash. They've got $2 billion in cash. So Palantir's total current assets is just over $2.2 billion. So they have plenty of cash on hand. And if we scroll down here, total assets of $2.6 million. Of course, that includes property and equipment, operating lease right of use assets, and other assets combined. And if we look at their liabilities, it's $1.1 billion. So they've got a good balance here. And then we hop down to cash flow. Their stock-based compensation was $1.2 billion in 2020. That's up significantly from $241 million a year ago. So again, that goes to Palantir paying their employees with stock instead of cash, which goes for the future of the company. I really, truly do believe that. Okay, so if we hop over to the charts, I know that's what you all are waiting for. Palantir today was down 12.75%. After hours, they're up 0.5%. So that cost comes to $27.98 per share. Now, Palantir was finding support around a $30 mark. And if their earnings report showed a better bottom line on the profit, then I believe this $30 support level would have held and the stock would have pushed higher. Now, since it has fallen this 12%, Palantir has a very strong support at $25. The lowest it got today was $27.30. I think this is an excellent buying opportunity, whether you want to start a position in Palantir or whether you're dollar cost averaging into Palantir. Because remember, this company just went public September or so last year, so it hasn't been public very long. And when it went public for $10, and it's gone up to a high of $30. So if you bought it back towards its IPO, then this pullback today isn't that significant, especially when you're holding for a long-term period. I believe when it comes to $25, it'll bounce off of that support. It has done that many times in its past. So anywhere between now, the $27.88, $25 is your buying opportunity for
Palantir, which we just found out you've added to. Can you tell our viewers why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short-term in your focus, you probably don't want to spend too much time investing in Palantir. So that's music to our ears because, and we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and we would say in some cases short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively for going short-term profitability in order to really to catch some very big waves out there. So I'm astonished. Their revenues are still 61% government, but I've learned, and I think most people in the innovation space have learned over time, that some of the most important innovations in our lifetimes have started in the government, especially in the defense sector and in the intelligence sector. So we think in many ways, and they won't talk about how, but they're certainly garnering a lot of business, which tells us that they are seeing in the future and investing in the future
So Cathie Wood is very bullish on Palantir going forward and thinks the company has a lot of growth potential behind it. I hope you found that clip as interesting as I did. Thank you for watching. I hope you found a ton of value in this video. Make sure to go to tickertimenews.com. You can find more information about Palantir and read our latest article, Should Investors Consider Palantir Technologies in Their Portfolio? You'll find a ton of information in that post that can help you and guide you on your decision on whether you would like to open a position in Palantir or dollar cost average your way into growing your position into Palantir. So thank you again for watching. Make sure to smash the like button, click the subscribe. We want to help as many retail investors as we can in 2021, and we need your help to do that. Thank you again for watching, and I'll see you in the next video.